there are three types of accounting: tax, managerial, and financial. Typically, when people think about accounting, they think about tax accounting, which means filing your taxes with the IRS. But you can't do tax accounting without doing financial accounting, because financial accounting is what I do, the record keeping, making sure all the numbers are where they belong on your balance sheet, on your profit and loss statement. If you're doing financial accounting, not only can you do tax accounting, but you can also do managerial accounting, which is the financial planning and analysis, or the FP&A department that I mentioned in a previous slide. And that is the department that looks at everything and makes some decisions about where the company's going and whether you need more money or whether you need to hire more people. That managerial piece can only be done if the financial piece is being done properly. So it stands to reason that bookkeeping is at the beginning, because without that, you can't do any of the other things. And so when a lot of business owners are neglecting bookkeeping in the beginning, what they're really doing is neglecting what is needed in order to have success in business, which again is why so many businesses fail. How much time is spent? Well, the majority of your time is spent on financial accounting. That's just how it goes. Tax accounting, much smaller piece, and managerial, to be honest, if you have the data and you're using a budget even or some kind of dashboard, the managerial can happen in a few minutes a month. You don't often need a lot of information. A snapshot view sometimes is really all it takes for you to get a gauge. If I were to tell you, you need 8 more clients next month, that's it. Real simple, right? What if I said, well, your margin is this and your KPIs are 6.4 for your gross, and that's not going to help a lot of people. But something simple like you need to make 16 phone calls a day to new prospective clients. That's simple. So that's really what managerial accounting is about, is being able to get to that. What's that really simple thing that you need to do? What's the action that needs to be taken? If you take the action, everything else works. What do we do with this data? Well, 65% looking for additional sources of revenue. So you take your data and then you go, how can I make more money doing this? How can I bring in more? How can I keep more of the profits? A small part of it you're going to use to cut your expenses. So you're going to look at the data and go, wow, I didn't realize I was spending that much on whatever it is, office supplies. So there's a certain level you can cut and cut and cut your expenses, but you usually can't cut rent. You usually can't cut payroll. And a lot of times you can't cut your food costs or your material costs or supplies or anything like that. So you don't spend a lot of your time looking at the data to figure out how to cut expenses. Usually it's going to be looking for additional sources of revenue. A certain amount of it, again, is looking at these financial projections. So you're going to spend a little bit of time doing the analysis and then a little bit of it doing your budgeting. There's not a whole lot to do because you're just taking data and comparing it to the goals that you laid out for yourself.